Michael Silverstein, why do China and India amount to a $10 trillion prize?
So it's 2.6 billion reasons why it's a $10 trillion prize. The population of China and India is experiencing the most rapid increase in real income in the history of the world. Never before has a population that large gone in India from $1,000 to $4,000, from China from $4,000 to $12,000. That's the calculation. That's what happens over the next 8 years.
The Chinese are known to be savers. What makes you think they're going to become spenders?
Well, the Chinese are savers. The total percent of the consumer economy in our current forecast is 33% of GNP in China will be spent by consumers. We are not predicting any change in that expenditure. It's the absolute real income increase that drives the growth in spending.
And what brands do you think they'll be spending their money on?
So Chinese are interesting. They don't consume like Americans. They trade up and trade down. So they trade up in luxury goods. They buy Louis Vuitton, they buy Gucci, they buy expensive watches. They lean towards foreign wine. They love foreign products. They love foreign luxury products. And then they trade down, and they are in fact increasing their absolute calorie consumption. They're going from being skinny Chinese to being Chinese that could live very comfortably in America.
Are there any American companies that are currently cracking the Chinese market very well, in your opinion?
There are a number. So a really good example of a great American company that put its sights on China is Kraft. And people don't think of Kraft, now about to be called Mondelez, as a company that has made a move in China. But in 2006, when Irene Rosenfeld became the CEO, their sales in China were less than $100 million, and they were losing money. And today their sales, I think they report, approaching $1 billion and making more money in China than they make in the United States.
India has notoriously been a hard nut to crack for American companies. What makes you think that global companies can come into India and start selling their goods much easier than they have in the past?
Well, India is the big challenge. And there are companies that have been very successful in India. Unilever Hindustan is 40% of the market value of Unilever. It has a 50-year tradition. It reaches into the most remote villages in India. It has done it. There are other companies. So I mentioned Kraft. Kraft bought Cadbury for $19.6 billion. And with that, they got a $400 million chocolate business, the Cadbury chocolate business. And they've now grown that pushing $1 billion. So it's possible, but it requires a lot of energy. It requires a local mentality. It requires you to understand that India is not one country, but a dozen.
And Indians are well known to be entrepreneurs. There's a great entrepreneurial spirit in India. What about some brands arising from India itself?
So I don't think there are going to be very many Indian brands that come into the United States, but there are a large number of Indian brands that are actually going to appear in the emerging markets. And there's a company called Godrich & Sons, that has an aspiration. Today it's a $3 billion company. If you sit and you talk to the CEO of Godrich, he will tell you he's going to be a $30 billion company in 10 years, 10x in 10 years.
This market has fewer players.
We're coming into a Monday where we're going to
would enter in a new stage at SaaS.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.